Goldman Sachs are worried and warns that hedge funds are worried about short squeezes.
Hedge funds, they are thinly capitalized and highly over-leveraged. We're talking 10-to-1 leverage or more.
Losing money in your 401k, you're losing money in your pension, you got to cut back.
One of Wall Street's riskiest hedge fund trades is imploding.
We got hedge funds blowing up. We have bombshells dropping everywhere. You're going to make some money from this. Kevin O'Leary. Trump is about to drop an economic bombshell on China that will make his tariffs look like child's play. And I said, tell me, Kevin, what do you know that we don't? And we already know that Trump is now exempting phones, computers, computer chips from the new tariffs. So tell me, my friend, my phone will always be on for you. As you know, this show is always about bombshells and fart jokes. Inquiring minds want to know. I want to know. Hey, do you guys laugh at yesterday's video when I said pull my finger? I mean, I thought it was funny. I mean, even Don Don's trying it. We are not going to fall for it. Also, Jim Cramer comes in clutch. This boy is insane. You guys need to go sign up for the club. Whatever it is, just do the bass backwards and you guys will be up. Jim Cramer says it's hard. It's getting harder and harder to defend Apple stock in U.S.-China trade war. Just like that, everyone's buy Apple, everyone all in, all in. Do you guys see this? 11 billion, almost 22%. Did someone know something? You know what I'd love to be is Trump's hairspray guy, you know, so we can listen like, okay, he's gonna do what? Hold on, sir, let me just go ahead. I mean, I know a little bit about hairspray. Oh, and by the way, my hair, actually, I am bald on top. I also pull it all over. But I mean, a week around the Don. You know how much money you could make? You're like, hold on, Kevin. Hold on. Yeah, yes, sir. They impose a 500% tariff on China. We'll accept for the stuff we buy. Oh, okay. Also, for those of you that are shorting the Apple that was up, you're like, it's up 4%. And then after hours, it came down. Be ready to get your face ripped off. I'm going to add that also. Thanks for subscribing. Closing positions at end of day or on Fridays. To my $1 million course. Also AI included and my bear market course included. $299. The reason why I'm doing that is I'm filming videos every day. And then when I am done filming, no more perks. That's it. And one more warning to you. This price of $1 a day on my options watch list is going bye-bye. So if you want it, grab it now so you can make 215%. That's what we all made on AXP on one contract. Also in these volatile markets, or when the Don's like, you know what should I tweet today? We've decided to bomb China. Might want to consider closing your positions at the end of the day. Definitely on Friday. But let me predict the future on Apple, trading it on the 4-hour, and you could have went in right there. 789, pulled, one candle close, ride it all the way up to the 200, rinse and repeat. You can do this on just about everything that I'm showing. And then let me tell you what's going to happen. You're going to have this gap right here. Now, this is almost 98% of the time on major indices. These get filled. It's going to go up, hit, and then get rejected. Congratulations on the swing up in your digits. But more importantly will be your swing down, because high tariffs since 1930s to trigger recession. S&P 500 to decline to, it's always 420, says BCA research. And no matter what this guy says, or that guy says, he's really orange on my screen. I'm just saying, that must be CNN. The charts will always predict before they even speak. And they do catch these things too. Also, I have not talked about GameStop in what, like 4 years? I did an interview with the CEO of Robinhood that they said I cannot air. Like, hey, question, you know that buy and sell button? So I'm trying to make this trade and it seems to be missing. It's like, cut the interview, that's it? Oh, you didn't see me? Maybe check out my channel. I actually am balanced. Goldman Sachs, guys, warns that hedge funds are worried about short squeezes and everyone is off sides and you guys can actually make a shat ton on GameStop. But again, just like always, turn on your 4-hour, okay? You got a 200, you're trading on the 4-hour. And when you move it to the 4-hour, you give enough time for all the wiggles, like, oh, this, that, and it just can't get above it. And the Bravo 9. Well, it's the Bravo 9 that is most important. Up in the left-hand corner, you'll see 4-hour, 1 day, 1 week, 1 month. And just in case you're wondering, while gold is skyrocketing, and we also have a death cross, hold on, I'll get to that. It is just like everything is blowing up over here. Some hedge funds are on the brink of blowing up. That seems to be the word of the day, as was the case during the 2020 crash, and the plumbing broke. FYI. And there is a lot of things that are on the books that they'll be shown in a month. So just because you think we're out of the woods and the market pops on Monday, everything's okay. We ain't okay. The financial system may be heading into one of the biggest changes in modern history. And then they go on to talk about US Treasuries, the dollar. To put that into layman's terms, you want to buy a house and you're like, okay, let's go buy a condo in California. So you would get a 30-year jumbo at 7.2% and rising. And then you go, wow, this is really expensive. It's expensive and they don't know how to fix it. It's like, wait, this isn't supposed to be happening. This is not what's supposed to be happening. Like at first, we're like, look what he did. The Don brought the 10-year from whatever all the way down to 3.5. Everyone's like, oh my gosh, to 2, to 1, to 0. Everyone gets free houses. And then kablooey, 7.2, 8%, 9, 10. How do we stop this thing? So I know you're like, just look at the stock market. Don't look at the stock market. Look at the bond market. See, what Trump was hoping for is bring that 10-year down. Then you could refinance all your credit card debt, which is at the highest since forever. We have about $10 trillion that we need to refinance right now. Thank you, Janet Yellen. He was thinking, you know what? We're just going to crash this thing, refinance. You can get out there. The housing market will explode. You'll pay off all your debt. It's going the opposite direction. Everyone is dumping the 30-year, and now my TLT, just when I thought, I could catch a break here on this trade. Thank you, Stephen Van Meter. He was like, you got to have a balanced portfolio, Bravo. You just can't be all stocks and gold and crypto. Then he said, don't trade it. It's going to blow up. Still, to this day, I'm underwater. Still a very good friend of mine. But lesson learned, always be moving your money and never just buy and hold. Always follow the charts, and it's as simple as one candle over the Bravo 9 on any time frame you want, but in these conditions, let's go to 4. In my new course, I actually teach you how to trade on the 1 minute. You're a day trader now. Wake up in the morning, you make a little trade, little cashola, and you're out. But boy, oh boy, big picture. And this was from Numora. If you guys want to sign up for their newsletter and pay $4 billion, I have never seen wording like this. We've got no jobs. Our pets' heads are falling off. Where it's just unwind city in the bear steepening, now bull steepening. We have a vacuum of liquidity. It means you have everyone on one side, no one on the other. Anyone want to buy this? Hello? No one? So it is a great time if you are a swing trader, because we like volatility, to be in this market. While Goldman Sachs is worried about short squeezes, one candle close. For the face ripoff, close position. Not hodl GME, which I'm sure I'm going to get some heat on that one. Going to the charts, GME, someone bought that at like $120. And you guys are still holding it 26 bucks, which, as you can see here, I had this in my watch list. I said, hey guys, it's a falling wedge. Put in a buy right there. You carry this line over here, it'll go all the way up there. Since I got you on the phone, I'm going to move this line over here, and I'm going to put it right there. And then actually it went up even higher. Oh my gosh, come on, you guys. Really? Went up to 64 bucks. You get way off that. But if I change this to line, you're going to see, yeah, close, but you would have made it. Let me put it another way. You would have taken advantage of idiots, because guys, you just have to be smarter than the other guy. If you have the indicators, and I just got an email like, oh, I can't, he's like, I cannot believe I've been trading without the indicators. He went back and looked at what his trades of why he messed up. Yeah. And he used profanity about himself. Also, link in the description if you want my indicators. Quote, 60% of the population has below a 6th grade. So that's 5th grade. Not too difficult to take advantage of people. Not to say that I want you to take advantage of people. That would be like Ray Dalio. But guys, people just ain't that smart. Like all the Mexicans protesting, right? Yeah, okay, yeah, I don't think that's going to work anymore, as ICE is like, oh, hey, let's go get them. Like the protests pretty much are becoming very limited nowadays. And that was in Colorado. But wherever it is, guys, these policies, they're not working. You can go over here to the Bohemian Greenwich Village, which was very left. Now it looks like everyone has left. Not so liberal anymore, as crime Drugs push residents to beg for more cops. You see how it goes from like, no more cops to, wait a minute, I don't feel safe anymore walking down my streets. Oh, really? Again, you guys, rich people, and a lot of times dumb people, you just have to be a little smarter. And you're like, I would like to take your money. Just don't hodl. Get in, you get out. You smile, you spend digits on things that you want. And just because on Monday it won't be red, it'll be green, it doesn't matter. The big picture, we're cooked from a macro standpoint. Again, stick to the charts. And listen to Larry Fink. This is BlackRock CEO. Recession.
I do believe we're probably starting, if not, we're in a recession. Yes, I think the market is still underestimating how high inflation can get. If you factor in all the tariffs, right? You factor in all these other issues, it's going to be quite additive. I mean, I read in a report that if you just take the tariffs in the cost of home building, the average new home could be up as much as 26%. We already have a housing affordability problem.
None of this sounds any good to me, Larry. I mean, and it's all self-inflicted, by the way. None of it needed to happen.
This is not a pandemic. This is not a financial crisis. This is something that we've created. But in the short run, I'm petrified at some of these issues.
So I'm going to go with big words. BlackRock saying he is petrified. I'm not the doom and gloomer now. That would be BlackRock. And he talked about the housing market. How would you like to pay 26% more? This is at a time where housing inventory across the nation, Florida, California, Texas, housing inventory in Los Angeles, now at the highest level in 6 years. California is starting to crack. Also, Nick has a really good YouTube channel, way better than mine. And JP Morgan builds a $1 billion. That is insanity. Reserve 3x more than the 290 million. These are credit loss. This is like, we see the storm coming. Okay, let's have $1 billion. They're thinking this is going to be 3 times worse than the vid. And the charts kind of pointed it out. You like that little death cross on the S&P 500? What does that mean? That means you might be halfway through it at this point. But boy, oh boy, are you going to get extreme bounces in these bear markets. Wouldn't it be nice if you could go through, a bear market course connected to $1 million course that you actually don't have to pay $1 million for? That's amazing. Teach you how to make money on the way down, and you figure out things like, death cross. Now, do we put in a trade because of the death cross? No. This is called confluence. Yes, it's in the course. You just take all of these things. Let's say you line up 8. You get 7 out of 8, make the trade. You just wake up in the morning, put the trade in, go to work. You're like, click there. If it hits that, okay. You come back from work and you're like, oh, hey, look, digits up. Because the macro picture, it's painting a really bad picture. This is kind of like taking candy from a baby. U.S. consumers are struggling. No, didn't see this one coming. The share, and I don't care. Tariffs ain't going to fix this. This is just, we're in market cycles. You just happen to be in it. Either take advantage of it or you cannot. The share of active credit cards in the U.S. making only minimum monthly payments rose. So this is not good. The highest in over 12 years. All right, I'm going to chalk that up to bad. At the same time, the share of accounts 90 days past due increased to an all-time high. Okay, since the birth of baby Jesus. And the credit bubble is bursting. But I'm sure a tweet will fix this. No one is expecting this to get better. Not even you. Actually, Americans' inflation expectations soars to a 40-year high. We can go back all the way to Duran moving forward. We're basically going off the screen. Wait, China doesn't have to pay tariffs on their Apple products anymore, so everything's fine. The truth is, nothing is fine. The number of U.S. multiple job holders. Yep, that's the American way. Get out there and get a job, and then get another one, and then get another one. Multiple job holders hit a 9 million in March. What? Breaking another record. Follow what they programmed you to do, right? Go to high school, go to college, get good grades, get a job, get another job, then get another job, and then buy a house. Oh yeah, you can't do that anymore, can you? Well, I have a solution. Trade equities, start businesses. And in a year from now, you can all thank me. That'll be 2026 when the new Snow White starring Samuel Jackson comes out. You'll thank me. And with that, I love you and I will see you tomorrow.